list. And, all right, welcome everybody. Today we're having a special guest speaker, Jody Hatano with Golden One Credit Union, and she's going to explain to you how it's going to work, because I really don't know. And this is a time to ask all of those burning loan-related questions, other than non-warrantable condos, that you would like to ask, or even that one. All right, so take it away, Jody.
Thank you so much. Thank you guys for being here. If you don't know me already, my name is Jody Hatano. I'm with Golden One Credit Union. I've been a loan officer for a little over 17 years now, and I've kind of seen it all. I started when the mortgage crisis was happening in 2008. In March of 2008, I became a loan officer for the first time, commission only loan officer, I should say. I was an assistant. And I had a really good March, my first month, and then everything went south. And of course, you all, if you have, watched the news or anything about real estate, you know what I'm talking about, with the meltdown and, mortgages, foreclosures, all of that kind of stuff. But I stuck with it and, have seen the really good times and the really bad times. And right now, of course, it's not the really good times, is it? We have really high interest rates. But the thing is, that's really the only, I know there's other smaller reasons why the market is what it is, obviously inflation and stuff, but the rates are up because of inflation. So that's our challenge. Thankfully, it's not, people are losing their homes and, all of that kind of stuff. And, values are down 75% and things like that. So for me, looking at this market, I'm taking it kind of like, all right, it's a time, of course, we're all a little bit slow right now. There's no doubt about that, but there are still buyers out there, right, that are still looking for a home. There's still listings that get multiple offers, maybe not as high as we saw, a couple of years ago, maybe not 20, but definitely a few at least. I have a couple that just lost another bid that they placed over the weekend, and they were competing with 5 other offers. So I think that it's a good time for us in the industry to take a step back and say, okay, cancel out all the noise. Everybody's got an opinion. I have mine. Go online, read the news, read, opinions from, these top financial advisors all over the country in real estate. And you'll get one that says, oh, rates are going to go down, I believe. And then you'll get one that says rates are going up, or one that says they're not going to do anything. So, whatever, it is what it is. We don't have any control over it. We don't have control over what's happening with, potential recession and the rate environment and everything we're in. But what we do have control over is how we process it, and then how we talk with our potential clients about it. And even maybe taking time to say, is this really what I want to do? And I think that we're going to see a lot of loan officers, not me, but I think we're going to see a lot of loan officers get out of the business, maybe even real estate agents, because it's tough right now. It is, no doubt. It's tough to get things closed. Credit markets have tightened significantly, especially in the jumbo world. We're seeing now requirements for a lot more down payment, a lot more in reserves, and a lot higher interest rates, which what does that do? That decreases someone's buying power. But from what level? So everyone's comparing still rates where they are now versus where they were during the pandemic. But we have to remember the pandemic is an outlier, right? That's not something that we anticipated to happen. It did. And, through various reasons, rates just plummeted. And then a lot of people were able to take advantage of those rates. Now they pretty much paid higher purchase prices, but lower rates. So now we're kind of like, higher rates, maybe a little bit lower purchase price. Not that was probably a little bit too high, maybe here. So I just wanted to have actually a chat with you guys, give you a little bit of an update where I think rates are going. What is it? It doesn't really matter what I think, but from what I'm seeing out there and conversations I'm having with industry professionals. And then I wanted to have more of a kind of a Q&A with you guys. I've got some questions I would like to ask you. I know I do a lot of talking, and I really want to hear from you. I want to hear from your perspective of what you're seeing in your market, maybe the pushback you're getting from people that you're talking to that want to sell, but they may, I don't know if right now is the right time, or maybe I've got a lot of debt and I don't think I'll qualify. What, is there, you think there's any way to get around that? A lot of people are taking on high interest rate credit card debt because of inflation and things like that. So food costs are higher, of course. So people are, needing to take that dollar that used to get them this much, and now the dollar is getting them this much, right? So they're having to add to their debt to be able to get back to the levels where they can feed their family and pay their bills. So it's really challenging. It's a challenging market out there. And to be able to stand out, between you and the competition, you're going to have more to offer your buyers and sellers now than you did even a year ago. So getting on it. Mortgage rates, of course, the Fed increased the rate again towards the end of last week. Well, I guess it was last week. I was about to say last month, but basically the numbers on inflation is that inflation is still lower than it was this time last year, but it did creep up just a little bit. You'll hear different things of the opinion is, are they going to increase rates again later this year? Maybe they will, maybe they won't. We won't know. But what I think has happened is, the markets, mortgage-backed securities and things like that, they've already kind of anticipated what the Fed's going to do. And so that's already priced into the market. So when you see the Fed, raise rates, say a quarter, that doesn't mean that, an hour later or the next day or the next week, mortgage rate's going to shoot up a quarter. It doesn't work like that. It basically is what's happening with the bond market is kind of how you look at mortgage-backed securities and what's happening with them. Mortgage-backed security prices is what I look at every day to determine if I think rates are going to go up or down in that any time that given day. This morning started out really rough. Here, let me pull my phone up here and I'll tell you what it was. Here we are. Okay, so this morning we started out 42 basis points below where we ended the day before. That's significant. And now, but already this morning, we're going into the afternoon, we're up a little bit. So it's kind of like that. So what I'm trying to do with my business is take the focus off of the rate, because the rate is going to be what it is. Now, from lender to lender, it could be astronomically different. So it is important still to talk about rate. It's still, a big qualifying factor in someone obtaining a mortgage, but there's a lot more to talk about than just interest rate. So when I get a call and someone says, oh, what's your rate? Well, what's my rate on what? I mean, I have a lot of different things we could price out, but I have a lot of questions I have to ask that person to be able to give them a rate. I can't just say 6.5, no points. I don't know. I don't know anything. Are you putting 5% down, 20%? Is this a jumbo loan? Is this conforming? Is it FHA? There's so many different things that go into factor how to come to a interest rate for someone. So I kind of start out talking a little bit more about, well, let's talk about what you're looking to do. What is it that you're looking to do? Do you own a current home? Are you selling it? Is this investment property? All that kind of stuff. So, what I want to talk with you guys about is what are the things that you're seeing in the market? How are the conversations going with you and your clients? Like I said, my questions they always ask me, what's the interest rate? Because they see me, they see just an interest rate percentage sign, and that's all they want to talk about. But anyway, so I want to have that conversation. Feel free to, let me increase my screen so I can see. Mike, do you mind helping moderate basically when someone raises their hand or wants to comment or something like that? You guys can even put something in the chat box. I've got it up too. But I want to start with just a couple of questions. And feel free, if you don't want to talk, that's fine. If you want to put it in the little chat box, that's fine. Or just email me later if you want. They're not like crazy questions. So one of the first question I want to ask, well, let me stop. But do you guys have any questions right now before I get into my questions? Give me a second.
You can raise your hand if you want to. You can just blurt it out like be a typical agent. Just shout it out.
Okay, I'll keep going.
No, one-
So did someone have something?
no, they're,
Okay, cool. All right. So one question I have is, aside from me at Golden One, of course, what other specific lenders are you guys seeing that you are finding to be beneficial in this particular market? Are you seeing lenders that where you need more non-QM things like what Mike's talking about before about the non-warrantable condo? Can you give me kind of an idea, just maybe put in the chat box the lenders that you're working with, that you're getting success from in this market? Now, if anyone wants to chime in and say something, and I do want to say, even though, we lenders compete, my thought process is we're still partners, right? We still will have the same objective. So I don't really look at other lenders as, well, competition. Don't talk about them. I have friends all over the place at different lenders. Okay, Audrey, first time home buyers. Okay, 100% no down payment programs. Okay, first time home buyer. So first time home buyers, just so you guys know, it doesn't necessarily mean they've never purchased a home before. Fannie Mae calls you a first time home buyer if you have had no interest in any real estate property within the last 3 years. Okay, so if someone sold their home 4 years ago, they're considered, and maybe they were renting, they're considered first time home buyer. So keep that in the back of your mind, because there's some definitely some pricing benefits that we have for first time home buyers, not we at Golden One, but in overall it's a Fannie Mae change. So first time home buyers is what you're looking for. And Audrey, do you believe that if I said, hey, I've got this great first time home buyer loan with no down payment, of course, keep in mind there are income restrictions all over the place, and each county is a little bit different, but there are income restrictions on that. But if I were to say I have this first time home buyer program, and everyone, if you can, or whoever wants to, can you say maybe a percentage of how much more business you would be able to close with first time home buyer? Now, anybody can everybody wants 100% financing, right? Who wants to put money down? But it's not like that anymore. You don't have 80% first and 20% second. So the first time home buyers, it's typically going to be your conforming loan amount. So under $1,089,300 down is going to be where you're going to get those kind of loans. Okay. So Audrey, first time home buyer, and Teresa, USDA.
and Neil had a question, and he was
Oh,
polite
okay.
enough to raise his hand. So we
Is there a way to find out the seller's loan interest rate? Not unless they tell you. I don't believe that the note that's recorded at the county, maybe if it's public record, then maybe you can go dig it up. But the note would be where you would find it if they're not going to tell you.
I can answer that.
Oh, perfect.
So the note is not recorded because the note
Oh.
is simply an
Sorry.
obligation
Sorry.
and not a lien.
Indeed.
And so what we usually do, which isn't perfect, is we use software to figure out what were interest rates at the time they got their loan, and assume that that is the interest rate, right? We're not sure, but we can kind of guess, right? By when it
I
was.
can tell you, Neil, if
I'm live, and the question is that I'm getting a lot of sellers and the general public thinks interest rates are going to go back to 3%, which that was an ironic thing that happened 3 years ago, with the pandemic, and now the inventory and prices are pretty close to what they were when we had lower interest rates. So that's why I was trying to find sellers that had interest rates very close to where well, not exactly, but in the ballpark, maybe 6%, 5.5%, or 6.5%, that I could talk to, and maybe they would be selling because they're used to paying that amount.
Sure. So my answer would be to find people that are sellers that are in the sixes. You're probably going to be looking back 2012, 13, maybe not even 13. I'd say, well, let me think. In the sixes, on just like if that's the way all the mortgages were priced around, like today we're in the mid sixes to mid sevens, probably before before the meltdown, I would say. So you're going to be looking at 20 years ago. Is that right? 2003, 4, 15, 20 years ago. The normal levels are going to, from what, in my experience, okay, the 2015, 16, 17, 18, the 19, that time period, we were 4.5 on a jumbo loan, right? Now those people during the pandemic are at 3. So 4.5 to 5% on jumbo. Jumbo, maybe in the lower 4s to maybe even high 3s on government loans, because those are typically a little bit lower than what you're going to get on conventional loans. So you'd have to go back pretty far to get to where we are right now.
I wish it was more encouraging, but it's I'll do the best I can. So is there Michael, could I ask you, is there a software you use to figure out when interest rates were at a certain level?
Right. So the software that we have access to, which is RPR and Realist, as real estate agents generally do not provide that.
Right.
You took out your credit card and you were to purchase a subscription from PropStream, PRO.
I know who they are.
Yeah, and I have an affiliate link, which I'll be happy to send you. But anyhow, I've never signed anyone up. And Property Radar are companies that have integrated, they say at least, interest rate data, because usually if it's a trust deed, the note is also included in the trust deed, and if you can dig deep enough, you could get it. And they say that the PropStream might be able to do that.
Fantastic.
Yeah.
Thank
You
you.
can also look at you can even Google interest rates in the last 20 years and get a chart, and it'll tell you, it'll take you to the month, to the day, even if you want, of where rates were, back then. And then you can check, on Zillow or wherever, if this person, the last time the person sold was in 2012, then you can kind of look then at 2012, that month of June or whatever, and then you'll see where the range is of rates and get a very good idea of where they probably landed.
Right. Yeah, I just feel that it's easier, if they're going to move, they're already paying that rate. Of course, they want the lower rate, but I can't help them with that.
Not yet.
No one did.
I hear you. Well, it's a good idea. It's a good strategy.
Thank you.
Let's see, USDA. Okay. No, so USDA to get a lower rate. So USDA is going to be more rural loans. So Teresa, depending on where your daughter lives or is looking, USDA, it's a great loan, it's 100% financing, but it's in rural counties.
So interesting enough, I wouldn't even have thought of it. She is probably moving to Washington and will be in a rural area. But I looked up I'm in San Luis Obispo County in California, and I looked up Napomo, which is most south of the county, and part of that could qualify. And
Nice.
some of those rates are quite a bit lower, and it had never even occurred to me. It was my daughter who brought it to my attention. So I just was curious. And then mainly my people are looking at conventional FAA, and VA is actually a little bit lower right now too. And we have quite a bit of military in this area. So,
You do. So,
but
VA
yeah, I'm gonna have to explore the USDA thing a little bit more, because I mean, their income, the other thing is, like, moderate income is $133,000 of annual income. It's not that low.
it's really not, is it? Yeah.
No, so it just surprised me. So I'm curious about like these type of additional products out there that may give us more options. So
Sure. So would VA help you grow your business?
we also qualify on the VA, my husband and I, but she would not.
Oh,
yeah.
okay.
And then I have clients who VA is definitely a possibility.
Okay, perfect. Okay. All right, let's see. What about if your title on the home's review, first homeowner name? Blanca, no, you would not be considered a first-time home buyer. And oh wait, as a trustee, you'll purchase home.
If she has a living trust, a family trust, and then she wants to buy it not under the trust name, they would still connect those two properties as the same ownership.
Yeah, if you have any ownership interest in real estate property, don't even try to get around it, because there's ways, and lenders will check and they will find out, and then you'll get denied. So don't even try. Basically, with the first time home buyer programs, I won't speak to the grants yet, but to interest rate, there are some interest rate reductions that Fannie Mae has provided for first-time home buyers, but it's income limited. So there's a restriction, same thing, the AMI, you got to check that county, see what their income is. Depending on the income they need to qualify, Fannie Mae does allow some income to be excluded. For example, if I don't need your bonus income to qualify you, then I don't use it, I don't verify it, then Fannie Mae will allow us to use only the base. And if the base puts them within the guidelines where their income doesn't go over the AMI, then they would qualify for it. And it is valid and legal, and Fannie Mae is okay with it. So it's not you're not trying to skirt the system or anything. So you keep that in the back of your mind. Just because someone makes a lot of money, what kind of money do they make? What's it derived of? And can I exclude some of it? Okay, cool. All right, so no more questions so far that I see, so I'll ask maybe a couple more. How is it important for you guys? I want to ask about lender name. Okay, so I'm with Golden One. I used to be with Chase, and then before that was with Bank of America. Had a little stint, Movement Mortgage and Prospect before it went under, a long time ago. But how important, on a scale of 1 to 10, if you don't mind putting it in the chat box, on a scale of 1 to 10, forget the loan officer. How important is that to you? 10 being very important, that it's name first and then loan officer and then service, or, so 1 to 10. So Teresa, so you're meaning that the name of the lender, whatever, is not as important to you. Is that correct?
That is correct.
Okay, cool. Anyone else? We got plenty of people in here, so I think 20. So let's see some more numbers. 2, okay. So Joe.
The only way it would be important to me is if I had had a bad experience with that lender.
Of
So
course,
then it would.
Okay, understood. Wow, everyone's sleeping. Quick approval turnaround. Okay, thank you, Eileen. Well, y'all, please keep putting your numbers in, and I'll keep moving on. Let's see. How quickly do you believe you need? Well, I'm not going to ask this one because that answer is going to be a number 2. Let's see. No social security number. Do you guys run across that a lot, or is it, maybe once or twice a year? Like if I had a program that said I can close this person that even though they don't have a social security number, would that help you? Or is it just kind of like, no big deal? So maybe just a yes or no. Yes, it would help you. No, it wouldn't. And please feel free to chime in with your voices if you would like. All right. Yes. Okay. Thanks, Valentina.
So
Sometimes
Blanca is saying she's looking for a loan officer good at what he or she does. There's a reason that I invite Jody to speak to the group, and the only other times you hear from other lenders are when they're doing something niche, like I may be doing another mobile home thing, because that's totally different, and I worked with Jody when she was at Chase. I moved our business when she went to Golden One, and the way I didn't move it because I kept it with Jody. If Jody were to go to another lender, I would still have Jody talking about it because I know she knows what she's doing and she's good at it, and I trust her. And if she gives me an answer, I believe what she's saying, which isn't always true with all the different lenders. So there's my suggestion would be, if you are having a buyer and you wanted to get them pre-approved, you ought to run them by Jody too, just to get a reality check. And as a listing agent, sometimes it matters who the lender is, right? In other words, if the lender is the loan agent and the realtor are the same person, that goes to the bottom of the list. right? Because I know they'll kill the deal if they don't get to do the loan. Right, they won't change lenders because they want to do the loan. And their pre-approval letter could be just a work of fiction, right? Because they're writing it for their own client. I don't, you just need to understand that sometimes the online lenders, if I'm a listing agent and you have one of the online lenders, I don't like that. As a listing agent, I would much rather go with a buyer that has a loan from a credit union, bank, or somebody that I knew and trusted. Much rather do that. So by picking at the lowest interest rate, it might actually hurt your ability to buy the house simply because the lender you end up with is not one that listing agents have any respect for.
Mhm. And to speak to that, Mike, thank you for all of that. To speak to that just on the tail end there about the interest rate is online lenders are typically going to always have lower rates than people local because they don't have the overhead. But you've got a call center somewhere in Texas or somewhere on the East Coast that you're depending on, and those office hours are what they are, and when they're gone, they're gone. You know, they're usually salaried loan officers with small bonuses, you know, whether it's monthly or quarterly or whatever. So the motivation for them to close quickly and to pick up the phone and talk with you and tell you what's really going on, it's not really there as much, right? They're still going to be able to feed their family, whether your deal closes or not. You know, me, I have to close, right? And you do too. All right. It's not just me, it's you as well. To feed your family, you've got to be able to have a successful transaction, not just the transaction that you're, you know, in right now, but future referrals, right? Our business is referral. So that seller or buyer you're working with, if you know they have a bad experience with another, you know, say an online lender, you know, I hate to say it, but it is true. You know, real estate agents and loan officers get blamed for a lot of things that go south in a transaction when a lot of times it has nothing to do with us, but we still kind of carry that burden, right? So to have someone that you trust, that you know is going to pick up the phone, you may not like what they're having to say, but if they tell you and pick up the phone when you call, then that is going to exponentially help you with your referral base because your people are going to be happy. All right. So 0.5% difference in interest rate, but you're talking about a, you know, $600,000, $700,000, $800,000 home, you know, whether they get that home or not, that 0.5% interest rate, that should not be the deal breaker. What should be a deal breaker is if the house is in bad shape or it's in a bad area or they can't afford it, you know, those kind of things. So speaking, you know, to online lenders, I used one when I bought my house last year. Okay. The reason I used one is because I don't like to share any of my financial information with my friends. So I had several friends that were a little ticked off at me because I didn't use them, but you know, I'm a private person when it comes to that kind of stuff. So I understand that. Okay. But I went with an online lender. They missed the closing date, never answered the phone call. I was sending messages. Why are you ignoring me? You know, this is what I do. Right. So, and the person just, it was a bad experience. I would never go back to Rocket Mortgage. Sorry. But that's how it was. So I was kind of glad I went through it just to see what the process was like, because if it was amazing and they had clear communication and everything, I would have been really impressed. But it was not. It was a bad experience. So, okay. So local is always better, whether it's me or any other loan officer you work with. You know, keeping it local will help you and your clients be more successful.
Let me just say one thing. I may be repeating myself, but from a listing agent point of view, right? If I'm the listing agent, we have 3 offers, and one of them is from a lender I recognize, and one of them is an online. One of them we saw recently. The pre-approval letter had a cartoon character on it, and was obviously printed off the internet, right? And then there's another one from one of like Rocket Mortgage, one of the other ones. I know, because I've been doing this a while, that loans with those companies generally do not go well, We don't close on time, they don't respond. And so when the seller is asking me, well, which of these offers should we take? I'm pointing at the one with the good financing. Right, not the one with the lowest interest rate. Because from the point of view of the seller, they want the one with the best financing, and that sometimes is not the one with the lowest interest rate. I don't care about the buyer's interest rate. I just want it to close on time. So you need to realize that a buyer trying to find the cheapest lender might actually be affecting their ability to compete if there's multiple offers. And they might have to offer more money than other buyers because they have weaker financing than the other buyers can show.
Mhm, mhm.
Anyway,
And, you know, that letter that you get and put with your offer is very important. Making sure that it matches the exact offer, you know, you don't want to give them something too high or anything like that. So, thank you, Mike, for that. Okay, let's see. We talked, FHA 203K. I've started getting some questions about this. I don't know if it's just the way where the moon is in the world right now, but I'm starting to get a little bit more interest in 203K. Are you guys seeing any, you know, buyers out there, or maybe if you're a listing agent, you've got a home that would be a great, you know, potential for 203K?
tell them what 203K.
203K, yes, I'm sorry, I should have said that. So FHA, it's an FHA loan. 203K, it's different than your standard FHA loan. The 203K is a rehabilitation loan for, not the person, the property. So let's say, Mike, you've got a listing and the property's in rough shape, right? It's not going to pass, maybe it won't even pass conventional appraisal. So, and then in most cases, it would never pass FHA because FHA is more strict. But the 203K portion of what the FHA offers is a rehabilitation loan. I believe it's up to $50,000 that the borrower can borrow before they move in. So this is how it works. You've got this house. Mike has a listing. It's got $35,000 worth of termite damage. All right. It's kind of sounding familiar, but $35,000 in termite damage. And nobody wants to buy the house because who's going to buy a house and then, you know, drop 35 grand unless they get a really great deal on the list price, but we've got competition to deal with. 203K would allow the borrower to come in, close on the property, and the value of the home would be the after repair value. Now they may buy it for, let's say, 500,000. If the after repair value is 550, then that's the value that FHA is going to allow on the appraisal. Okay, so basically FHA then has this money, you close, and the FHA has the money put aside in an escrow holdback, and it's ever so often divvied out to the contractor. There's some rules and regulations with it. So, you know, it's certain contractors, it can't just be your uncle that wants to do the work. It has to be licensed, insured, bonded, all of that kind of stuff. And so FHA will pay the money to the contractor as the work is done. All right. And then when the work is done, if rates are lower and the person wants to refinance, then they can, and they'll have that higher value. Well, I can never say they will have higher value, but they should, right? Because we're looking at after repair value. So basically, if you've got some properties out there or listings that have some issues and it's not moving, 203K might be something to be of interest. I personally get 203K requests from a lot of first-time home buyers because they see a home and they want to make it their own. You know, they want to go in and do some work. It doesn't have to be in bad shape or anything like that. You can, maybe it just needs a new roof. You know, maybe it needs landscaping. It will even cover landscaping costs, not a pool. So you can't put a pool in, but it will cover landscaping costs and, you know, roof and things like that. So would be telling you that. Has anyone, you know, is that of interest? Do you think that would help you grow your business? If not, so to actually originate, or for me to originate the loan, but for you to say you know someone that could, you know, do you think that would help?
We're getting yeses,
Oh, good. Okay. Let me
not
Yeah.
yes,
What-
thumbs and thumbs up.
Absolutely. What kind of rate are those, and what is the, how does that loan work, and what are the terms of the loan, and like how long is it, and then does it just roll into the bigger FHA loan? Can you explain that product a little bit more?
Sure, it's just your standard FHA loan. It's the same price, the same as if it wasn't 203K. So it's the same 30-year fixed, or if you find a lender that has an ARM, I don't recommend FHA ARMs, but it's just your standard loan. So nothing rolls in. They don't have to refinance it. They can if they want to, depending on where rates are at the time.
So it's 30 years. Is it's a separate loan, or has it become part of the main
It's-
FHA loan?
Almost forget that I even said 203K. It's just an FHA loan that will allow the buyer to do up to $50,000 in repair work and use the after repair value for the
Yeah,
property.
no, that's perfect. Because and I do think we have people that would benefit from that.
Well, I'm thinking also for you listing agents out there, when you go see a property, maybe you've got a listing appointment and you're walking around the property and you're like, this needs some work. Well, to get a cash sale on that, the seller's gonna get less money, right? Because the buyer's gonna come in, well, I gotta do all this work, so I'm gonna cut the price down, blah, blah, blah. But if you can offer perhaps a rehab loan and you can tell your seller that you've got a lender that has this option, then, that might help you get the deal. Other agents, I'm sure, have lenders that do 203K, but every now and then maybe you have some seller that needs it.
So would this be something a seller this would have to be something that a buyer would do?
I need to check. I can Google it real quick
All right.
if 203K is, so the seller would be basically refinancing, right?
Right.
So
I
they
mean,
do a lot of work.
I thought that you could do a 203K loan on just a house that you own, like to fix your
Let's see.
garage. Or, well, maybe.
Yes, you can.
Yeah.
So if you need basic or full-blown renovation on your home, you can refinance into a 203K, even if your current loan is not an FHA loan.
Yeah, so you can get, so this is,
Yeah.
I call this doing your own flip. Rather than selling it to somebody, right, and letting them fix and flip it and make money. If you can get it fixed before it's sold, then the seller can make more money. And of course, if you're a listing agent, you would get more money because the seller's getting more money. And if you were a listing agent helping them with the process of getting it fixed, you might be able to charge more than a listing agent who doesn't help with that.
Mhm.
And in fact, we've done in the past seminars, it's been a while, where it was all about how to get your home, because you have people that have equity, but we have to look at qualifications, but we were talking about how to get your house fixed up and then sell it when you don't have, the money right now to do that.
Mhm. Cool.
Something,
Okay.
yeah.
Good stuff. All right. So next question would be, what do you like, assuming it's not me, what do you like about your favorite lender right now? What's the best thing about who you're referring to? If you're not referring to me, what's the best thing about that other lender?
Dependable.
Dependable. And when you say dependable, what do you mean? Is it, calling back within a certain amount of time, or evenings, weekends, or, you trust what they're saying to be true? Can you expand on that? Eileen?
All of
All of
the
it. Okay, cool. All of it. Okay. Okay, here Audrey says just closed on a 0 down payment for buyer. Only had to pay closing costs. Quick response. Cool. Only had to pay closing costs. All right, Audrey, do you mind? Well, never mind. I'll ask you that offline. Let's see. Dealing with home. Yep. Okay. High communication gets the deal done. All right. For me, it's about the relationship and ability of lender to close, not about the company. That's the other. Okay, cool. Anybody else want to chime in on what they like about their favorite lender? Maybe they don't have a favorite lender. Let's see, C2 Financial. Okay, cool. Let's see. Is co-marketing important to you? Because I've done these calls now for a little over 3 years, and we've got co-marketing it's kind of been a frustrating point for me because I've there's so many things I want to do that I can't. If I was able to do a lot more, modern progressive marketing, are you guys into, really diving into social media, YouTube, Facebook, Twitter, or Threads, LinkedIn, Google? Like, are you guys into that kind of stuff? Because I don't really get much about that. I know Nirmita, yes, you and I need to get together. I'm right down here to call you later. Okay. Okay, so Blanca, you would be into it too. Do you guys do any, like, does anyone here have, say, a TikTok page or whatever it's called? Sorry, I told you guys before, I need to get into social media, and I'm going to do it, but I haven't done it yet. Because Golden One doesn't like for you to get into that kind of stuff. It's a compliance thing for them. No TikTok, no TikTok. Do you think TikTok is a good place to market? Little short snippet videos. Do you think it's a good place? No, not interested. What about Facebook? Facebook better, in your opinion? I like Facebook. Thanks, Joe. All right. Anybody else do any marketing on Facebook? Could you use good info, current program rates, area people ask about? No one's okay. All right. Pinterest. Oh, I didn't write that down. Thank you, Blanca. So the thing about social media that I want to say is, I've had a lot of interest in it, but I'm kind of restricted on what I can do here. But I really think going into this next market, you can kind of look at this market as a time to, regroup and plan out what you think the next, few years are going to look like. WordPress blog. Thank you. Okay.
Well, yeah.
Go ahead, Mike.
No, it's all right. I can.
Oh, okay.
I have to.
I
I'm
believe
moving back.
Sorry.
Go
Okay. Going into, this next time, this next period in our lives, I think that we're going to be needing to advertise and market to millennials, Gen X. Well, I'm Gen X, but barely, but Gen Z. These people grew up on Facebook and MySpace, right? We all, most of us, because I think I know a lot of you, we remember the days where you had the MLS book, right? And that's how you found a property. And then it went to online, and then paper loan files, and then now everything's online. We're from the old school where everything was just either in print or phone calls and emails, right? We didn't really do social media that much, but that's what the next generation is into. So if you want to be successful and do more than just pay your bills, but excel, I think we're going to have to get into social media and really deep dive. Okay. It's all about the name recognition. And if you watch anybody on TikTok or, whatever it is, there's a lot of really great people out there that do some really amazing things. And I see that they're successful. I've called a couple of them. I'm like, did TikTok did it help you? Because I'm not even on TikTok. I just do Facebook Reels. And they're like, you wouldn't believe it. Like all the messages I get. Now, of course, some of it's going to be whatever it is, but they are successful and they do enjoy it. So if I was able to offer something, super cool with social media, those of you that haven't yet, would you entertain it? Would you want to get into it if it didn't take a lot of work at all from you? More videos, Blanca. Okay.
So why don't we schedule something? I haven't done the social media segment in a while, but I have thoughts about this.
Okay.
But yes, content is one thing.
Right.
You have to get an audience to it.
Yeah, that would be great, Michael, especially if you talk about how to get our audiences, how to build the people to come to whatever it is we build.
All right. Statistically speaking, when the NAR asks buyers and sellers, how did you meet your agent? Social media is not high on the list. And generally speaking, you either have to pay for clicks, or you have to be an influencer. And to be an influencer, it means you have to have interesting stuff. And you have to reach people. And you need to get people to like, share, and comment. There's something called a ratio. If you post stuff and no one likes, shares, and comments, the algorithm from all the social media sites will stop showing people your stuff. Why should they? Nobody likes it, nobody shares it, nobody comments on it. Why should they? So that's the hard part, right? Getting people, getting an audience and doing things that are interesting to people in addition to just real estate stuff. The biggest mistake I see is that some agents just post real estate stuff, real estate stuff, real estate stuff. My biggest posts all involve something kind of weird, right? Not real estate, right? Things that I've gotten the most engagement from were obviously not real estate posts, right? But you need to do something like that just to get people to pay attention to your posts. But we ought to do, I haven't done social media in a while, and we could have, Jody has content that she could share with you. So by the way, the Chicago title, right? But between the two of them, there's more real estate content than you could use. EXP has social media content. EXP gives you a blog that you could use, right? All that stuff is available. We ought to just do something. And because we got a lot of positive response to that.
Try it. If it doesn't work for you, then it doesn't, but you got to at least try it, right? Well, that's all I have. You guys have my phone number if you ever need anything. I will probably be scheduling another call with you guys here in the next couple of weeks. I've got some really exciting news to share, but I can't share it yet. So I've got some really exciting news coming, and I'm pretty pumped. I think that it's going to help elevate our business. I think that I'll be able to help you guys a lot more than I have been in the past since I started these calls 3.5 years ago. So stay tuned for that invite that goes out here in the next couple of weeks. All right. Thank you. Have a great, wonderful rest of your day. Call me if you need anything.
All right. Thank you, Jody.
Okay. Thank you.